everybody? Welcome back to the channel. We are back on another episode of the Daily Recap. It is Tuesday, May 20th, and oh boy, what a Tuesday it has been. I just spent 6 hours on a market close live stream because we had Google, the I.O. event that we'll talk about. We had Elon Musk do 2 separate interviews throughout the day, and he gave us some pretty interesting details about what's going on with robotaxis and the future of Nvidia and the relationship that Tesla has with Nvidia, aka they're buying a crap ton of chips. We'll talk about that, what it means for Nvidia and the semiconductor ecosystem. And then we had a bunch of deals with Palantir today, 2 deals that caught me off guard. One in the morning, kind of your typical Palantir PR, with a new company in regards to Warp Speed, which is their manufacturing software. And then you had a partnership near the end of the day with Europe's largest technology company. Palantir is not really big in Europe, so this partnership I think is really juicy. We'll talk about it, the implications of it, what it means for Palantir's growth in Europe. And then we got a bunch of macro stats that I want to look at in regards to understanding what's going on in this market. Late after the market closed yesterday, retail, I got some data, bought the dip pretty aggressively. Today, we're getting the other side of that data, not just if retail is buying the dip, but are the institutions actually participating in this rally? We got a lot to talk about. Thank you, everybody, for being here. Let's get into it. All right, so let's start off with Tesla. I think really Tesla is the main story of the day, and Tesla kind of bleeds into Nvidia as well because Elon talked about Nvidia a lot. And so we're going to go through some of the implications on what's going on in the context of Tesla and Nvidia. So what happened today with Elon Musk? He spoke at the Qatar Economic Forum in the morning. That was with Bloomberg. And then in the afternoon, he spoke with CNBC. Now, the Bloomberg interview, if you were watching it live in the market open, wasn't really the best interview. Elon in particular, I'll put the tweet that I posted in the screenshot right here next to me, which shows what Elon said. He specifically said, "I think you are trapped in the NPC dialogue tree of a traditional journalist. It's like talking to a computer." NPC is what you refer to, which means non-player character. It's kind of this idea like you're in a game and you're not really playing and you're not really that relevant. And the journalist, the reason he said this was asking some questions, not about FSD, not about Optimus, not about robots, not about the ethical implications of AI and what's going to happen to all these jobs and what it means for the future of humanity, Neuralink, SpaceX. She was asking about, hey, do you have FaceTimes with Vladimir Putin? Because she was citing a tweet that Elon sent a year ago about saying he wanted to box Putin. I mean, really, it was just some of these questions, yeah, about Doge, like you bring it up, but every single question was something that was rooted in a political affiliation of Elon or trying to get him to say something that could turn into a headline. It was just not the best interview. And Elon actually responded to my tweet underneath what I posted when I quoted him with a laughing emoji. And I responded to him by saying, "Bro, I was on my market open stream with 7,000 people watching you live, and we could not believe that these were the best questions that the legacy media could come up with. At some point, it became obvious these questions were planted with an agenda, and an NPC was expected to ask them and keep badgering you until you give them a headline." That's really what it felt like, genuinely. But the only headline they got now is Elon calls journalists an NPC, and I'm not sure if they're going to run with that headline. So that interview wasn't the best. It just wasn't the best. And I think a majority of us that were in the chat in the morning on the market open, we were kind of just like, what's going on, right? Like, can we ask about something that's actually relevant and that matters? And I think more and more people are just getting so tired of these clickbait, sensationalized ways of trying to trap entrepreneurs into saying something. It was just something that we didn't want to see. So then CNBC actually started asking in some good questions and started asking him about Uber and FSD and robotaxi and all this stuff. And Elon gave us some quotes, and these quotes were very, very important. So the first thing he said about Uber, number one, there is no need for Tesla to buy Uber. He was then asked, "Hey, can you build the app?" And he started laughing and chuckling. He was like, "Yeah, I think we can build an app. I think we can figure out how to, but we already have a Tesla app. So we can build a ride-hailing app." So there are people in the Tesla community like a Gary Black. By the way, Tesla, I think, ended on the day at 345. It hit 354 at one point. So Tesla did get a little bit of a pump while Elon was talking. There are people in the community like a Gary Black who have a lot of influence in Tesla, or they have a big followership and people listen to how they think about the stock. And they've been saying Tesla needs to buy Uber. They've been saying Tesla needs the distribution. Uber has 170 million monthly active users, and robo-taxis are cool. But if you can actually get all the users from Uber integrated into the platform, then boom, that's like your Super Bowl case. Elon today on CNBC is like, no, we don't need any of that. Like, why? Why do we need 170 million monthly active users from Uber if we can build something that decreases the cost per mile? With like more aggressively, right? So if it takes you $50 to get to the airport with an Uber and it costs you $35 in a self-driving car, I mean, if you get over the self-driving car part of it, which if it gets more safe than a human driver, and the world kind of adapts to that, then yeah, I think the market's going to pick the thing that's cheaper. I mean, that's $15. Like, who wouldn't want to save $15 going to the airport? I definitely would want. I pay way too much to go to Newark Airport here in Uber rides and Lyft rides. And so I would obviously pick something that's cheaper as well. The question becomes, can they get enough scale? And there's a comment Elon made about scale that we'll talk about in a second, that allows them to be able to get to the point where it's cheap enough to the point where they don't have to buy Uber. So that was kind of the first headline we got from Elon in terms of him not needing to get the distribution of Uber. Then he said in the first week of Austin's robotaxi launch, which is happening by the end of June, so not in 10 days, in June, at the end of June. So Elon's kind of pushing the timeline by the end of the month, but hopefully by the end of June we have it. He said we'll have 10 to 12, not 10 to 12,000, but literally 10 to 12 of robotaxis on the road. Over the coming month, we'll have thousands. By the end of 2026, not in 2026, by the end of 2026, so 18 months from now, we should have hundreds of thousands and potentially 1 million vehicles driving unsupervised FSD and part of the robotaxi network, not cyber cabs, but actual vehicles that are Model Ys, Model 3 that have FSD. For example, my Model Y, if I wanted to hook it up to the robotaxi network in an unsupervised way, I could just press a button and then boom, my Tesla can go out and give people rides. That is Elon's ambition. I think the reason the stock is holding its multiple, even though auto sales are down 20%, is because the street is continuing to believe in that idea. Cantor Fitzgerald reaffirmed their $425 price target yesterday. It's been a while since a firm came out and said, hey, we are bullish, $400. Morgan Stanley came out with their $410 price target today as well and reaffirmed it. You're starting to see a little bit of a shift in sentiment, and that shift in sentiment is becoming more optimistic for Tesla. And one of the reasons it's becoming optimistic is because Elon, A, has started to kind of deviate from Doge and politics, even though he is still political. He's not spending every waking second at Doge anymore. And B, you're getting closer to some real progress when it comes to A, FSD, which is the big one that everyone thinks is very close by. And then Optimus, which I've been on record saying if Elon drops any announcement that says, hey, Walmart wants 100,000 robots, this stock is going to be a different story because I don't think the street is ready for the humanoid revolution. I'm a bit biased. I'm invested in 2 private humanoid companies. I do think there's a thesis there that the street is not getting yet, and they shouldn't get it yet, right? They don't have enough evidence. Once they get that evidence, I think they will be very excited. This is the last thing Elon said that kind of got headlines today, and this transitions us into a conversation about Nvidia. Elon says we are planning to have 1 million Nvidia Blackwell chips at the new facility for XAI. That's bullish. The last supercluster had 200,000 chips, which I think they unveiled back in February of 2024 or 2025. That's a 500% increase. They want to get that done by next year, which means that's a lot of money coming into Nvidia. How much money? Well, it's a $30 to $40 billion ticket to Nvidia when you do the pricing on the Blackwell times the number of chips that Elon wants to get. And that's not 800,000 added to the additional 200,000. That's in a new 1 million chips because it's a brand new data center, brand new supercluster to try to build the next version of Grok. If that was done in calendar year 2026, that would be about 15% of the current street revenue estimate is if Elon could essentially buy $30 to $40 billion worth of Blackwell chips from Nvidia. And, you know, Jensen's probably excited to sell that to him because if he can get those chips, then when Elon wants to upgrade to the next generation of whatever Nvidia comes out with, Elon's going to be very excited to buy even more because they just need more computational infrastructure and more power. So when you look at it from that perspective, 1 million Nvidia chips, FSD is going, getting ready to begin scaling as per what Elon said today. And then Optimus is going to have those GPUs as well. And if they actually start scaling, you're going to see a lot of GPU demand for robots and Optimus in general. It's just hard to see that Nvidia is still cheaper than a Walmart or a Costco. So from that perspective, very bullish for Nvidia. Obviously, all the UAE stuff that we talked about yesterday in terms of the Middle East was very good for them. And then we got this tweet by Sam Altman. He says ChatGPT daily active users have increased 4x over the past year. Messages by day, much more than that. I think they're close to basically 1 billion users, 800 million to 1 billion users. At the same time, the engineering team has greatly increased reliability and is now making real progress on speed. Significant scale to be doing this at great work. Essentially saying, hey, our user growth is crazy. The queries per day is crazy. A lot of those queries are deep thinking queries, aka they need a lot of reasoning models to be able to get the right answer. AKA you need more NVIDIA chips, you need more computational infrastructure to make that happen. So everything that ChatGPT is saying, everything that XAI is saying, everything that the Saudis and the Qataris and the people in the UAE want in the context of NVIDIA is just screaming to me that even with the Chinese headwind of the $5.5 billion charge-off and maybe they lose about $15 billion in revenue this year from China, NVIDIA is going to beat and raise. We got earnings on Thursday. It's going to be a big one. I don't expect the stock to really go to the moon because the stock is already up from 110 to 130. So I think if it kind of consolidates there, that's fine. But if they can put up a big earnings, then this could be very, very exciting. Okay, next topic is Palantir. Let's discuss that. We had two things from Palantir today that I thought were really important. Number one, we got a partnership with Warp Speed. For those that don't know what Warp Speed is, that is Palantir's essentially operating system for advanced manufacturing. The whole idea here is, hey, can we reindustrialize America by bringing back jobs to America, very consistent with what President Trump has been trying to do, and then build smart factories and digital twins and systems that make the process of manufacturing more efficient. We cannot compete with China, Thailand, and Vietnam with their cost of labor, but we can compete on technology. And Palantir's Warp Speed product is essentially saying, hey, what if we can compete when it comes to manufacturing on a software basis, and that in turn makes enterprises more efficient. The best example of this is with Panasonic Energy of North America. They're located in Nevada, and they make the batteries for Tesla. Palantir is powering that factory in Nevada and potentially going to be powering the Wichita, Kansas factory that's opening up later in 2025. So the deal today is that they signed an agreement with Divergent. Divergent's going to be using their advanced manufacturing system via Palantir's Warp Speed. Shyam Sankar, CTO of the company, said, Divergent is a trailblazer in the new industrial revolution that is sweeping the US. The Divergent adaptive production system is a mind-bending example of what's possible when the world's most advanced software fuses with the world's most advanced manufacturing. We are proud to support Divergent's innovative solutions with Warp Speed as it scales in ambition and impact. So you got Warp Speed and Foundry coming over to Divergent, which has a pretty advanced manufacturing system. And from that perspective, that is what's leading to the momentum that we're seeing more in Warp Speed in the context of Palantir. Now, some of the stuff that Divergent does is having to do with next generation digital manufacturing, particularly around 3D printing. So when you look at what it means to design something, print something, assemble something, especially at scale with all the A, architecture that's needed, B, AI that's needed, C, software that is rooted in supply chain and logistics efficiencies that are needed, it's a big deal. So this makes a lot of sense to have this partnership with Palantir. And I think the more and more and more we get these partnerships, the more potential we're going to be able to see for Palantir to scale. Now, the next partnership we got today, I thought was really, really exciting. This is Alex Karp presenting at the SAP conference. SAP, biggest tech company by market cap in Europe. Here's what he had to say.
Christian, delighted to be here. At Palantir, we are maniacally focused on value creation for our partner, our client, people we work with, and our partners. We use Ontology to manage large language models and Foundry to reconcile data. And in the combination of those products and your products, we believe will be extremely valuable for our collective clients and partners. And we're very much looking forward to scaling this partnership and delighted we've gotten this off the ground. All the best.
Okay, so this is pretty cool. And the reason this is so cool to me is because let's think about this. Palantir is not really making a ton of money in Europe. In fact, their commercial business is really not doing that well in Europe at all. SAP is one of the largest technology companies in Europe, and it's based in Germany. Year to date, SAP is up 23%, market cap of $364 billion. And SAP has a lot. And when I mean a lot, I mean, I can't even underscore how many opportunities they have to access the enterprise through a variety of different products and services that they actually offer. Now, I don't know exactly how Foundry and AIP are going to be integrated into SAP's offering, but the point is, if there is some level of a partnership that can happen with SAP and Palantir, obviously they both compete in a variety of different ways. SAP is just way bigger in terms of its revenue and all that stuff than Palantir. The collaboration, as an investor, the only thing I care about, given that Palantir is trading at this multiple, is how can we continue to accentuate a growth story? And a growth story on Palantir, we had U.S. commercial, U.S. government is exploding. We talked about the $218 million contract they got yesterday. We need Europe. We need Europe, or at least we need somewhere in the world besides the United States, because eventually the United States is not going to be the growth story. And so to get to Europe, you got to get through some of these European governments. You got to get into NATO, which Palantir has been able to do. You have to be able to get through an SAP that has thousands and thousands of European clients. It's like, hey, maybe they offer Palantir in the marketplace and Palantir is able to make inroads. Like, I think the takeaway for this from Palantir investors is, how do we get into Europe? What are we going to do to get into Europe? And if we can get into Europe, how big can the growth get? And so based on this partnership today with SAP, we'll get more details in the future. I thought that was very bullish for Palantir, essentially beginning to make its way into enterprises inside of Europe. Okay, next up is Googs. We got to talk about what's going on with Google. It was a very important day for Google. Google I/O 2025 was on today. I was streaming it live for those that were with me. Thank you for being there on the stream today as we watched Sundar present a lot of stuff. Look, the presentation was kind of boring. It wasn't that interesting. I own Google, so I'm not a Google bear. I'm hoping Google goes up because I own it and I would like to make money on Google. But there's a bull case and a bear case, and I'll kind of break it down and make it as simple as this. And the one thing that we're not going to get into today is that they introduced glasses, the Vision, like their version of the Vision Pro, Samsung XR, and they're incorporating like you being able to walk down the street and like see a map on your eyes. I just really do not believe in the glasses form factor, and I hope to be wrong on this in 5 years. I didn't believe in it when Vision Pro came out. I don't believe in it with the Meta Ray-Bans. I don't believe it with Google Glasses. I just don't think people are going to replace their phone for their glasses. I know I wear glasses every day, but I wouldn't want to like look at the world in my glasses. Maybe I'm saying something that is going to make me sound super outdated in 5 years. And I hope it does, because if glasses take off, that's a new vertical, a new S-curve for companies to make money off of. I just don't believe in it. I really don't believe in that vertical. So take that with a grain of salt, but they did introduce some of this glasses stuff. The main thing that I want to bring people's attention to is this picture that you're seeing on the screen right now. This is the search year-over-year revenue growth on Google. As you can see in Q1 2024, search was growing 14.4% year over year. Not YouTube, not advertising, but search in particular, which accounted for about 55 out of the 90 billion in revenue that they had in Q1. Okay. Q1 2025, year over year, that declined by about 5%. It went to 9.8%. So you get from 14.4 to 9.8. What's the issue there? Well, the issue is that the rate of growth, even if the absolute number of dollars that Google is bringing on search is increasing, the rate of growth is decreasing. And this picture right here is the reason why I think the street has the multiple on Google the way they have the multiple. They're discounting Waymo, they're discounting their robotics, they're discounting YouTube, they're discounting cloud and the operating margins efficiencies, they're discounting their other bets, they're discounting their free cash flow, the cash on hand, the buybacks, because of this one metric. There's also a DOJ narrative that could potentially break Google up, which is not good either. But I think the search narrative is the issue. So coming into this event, my question was going to be, what can Google show me to feel that this search year-over-year revenue growth is going to get back to accelerating, maybe not even year-over-year, but at least quarter-over-quarter. Year-over-year, Q2 of 2024, they put up 13.8% year-over-year growth. Q2 2025, if that number comes in at 9.5%, which would be down year-over-year, similar 5%, and down quarter-over-quarter, I don't think Sundar can say anything that's going to get people to get that excited about Google. Now, is it still aggressively undervalued compared to like Costco and Walmart? Yes. Google, I think fair value is closer around $200. But that's the narrative that's causing an overhang on this stock. So they've got to beat 13.8% year over year to break even on search and have 0% growth. If they come in below, then from a year-over-year perspective, they're going to still be declining. If they come in at 10%, at least quarter-over-quarter, they'll be going up even if they're declining year-over-year. So then the question becomes, okay, what did they say? And what I got from this event is one thing that I do think is bullish. So this is the bullish part about the Google I/O event. Personalization. I just downloaded Gemini today. I'm going to be playing with it over the next couple of weeks. It has all my Gmail, my Google Docs, my search, my YouTube history, etc. I want to see, will I stop using ChatGPT and Grok, which Gemini, they also announced as 400 million monthly active users. Gemini and Grok, or Grok and ChatGPT is what I use every day. And I haven't really thought about using Gemini. If I start using Gemini Pro 2.5, they showed some really good benchmarks. I mean, everything they showed was really good stuff. The question is, will the personalization that they are offering inside of Gemini, and then eventually the monetization of that personalization, will that lead to me not using Grok or GPT and me saying, you know what, I've got to be on Gemini because everything else is incomparable given how well it is able to become my personal assistant. I think the overall presentation was a little today in terms of them being able to make that argument. I mean, they did a good job at showing the things they're doing, but it really comes down to, like, as an investor, right? I want to see the numbers. The numbers in Q2 are really going to matter. Are you guys growing year-over-year search revenue? And it might take a couple quarters because Gemini is not rolled out to everybody yet in the way that Google wants it to be rolled out. And it might take some time for that personalization to really get you to be stuck on Gemini or still stuck on Google search in AI mode. I think time's running out, though. I mean, lots of people are using ChatGPT. Sam Altman just said they grew users daily active, not monthly active, not weekly active, daily active, 400% year over year. They're nearing 1 billion users. Grok, although Gemini has more users than them, Grok is also a very good model. People are using that. Anthropic, Claude. I mean, there's just a Meta with Llama, Apple. Who knows what they're going to come up with? They announced WWDC in June. We'll see if they have their own models or they're just going to be using other models. But the point is, it's a very competitive space in the model business. And as much as we say ChatGPT and these models might become commoditized, which I think they are, the ones with the most amount of users might still win. And I don't know. I don't know about Gemini. It's not a reason to sell Google at all. I don't think Google is going back to 100, 124, 130. I think your downside is pretty baked in. Could it go lower? Sure. I don't think it's a dead stock at all. I think there's a dead narrative right there around search. And if that starts to change, the stock multiple will easily reflect that, because this is one of the most undervalued Mag 7 companies in general in the market. But from what I got in the presentation, it's a lot of, hey, cool stuff in terms of making Gemini personal. Can that actually reflect in me not using the other products? And then when I use your product, can you monetize me the same way you monetize 10 blue links? And if you can't, Google's not going to be able to perform as well as some of these other Mag 7 stocks. If it can, then even if, their enterprise business lags off a little bit, or even if Waymo doesn't do that well, this is the cash cow. It is search and their ability to monetize search and keep our data in one place and keep users coming back every day. If they're able to do that, I think the narrative changes. And if they're not, then I think Google is still stuck in the overhang that they've had right now. So for those that watched IO, for those that saw some clips, let me know in the comments. What do you think? Are you buying Google? Is it cheap here? Do you think it's still expensive because of this narrative? And ultimately, based on what you saw at the event today, do you actually think, like, this is the multi-trillion-dollar question, literally multi-trillion-dollar question in terms of Google's market cap, can they get search to grow year over year while maintaining an AI version of search that is also monetizable? All right, last thing I want to share on the day, we did have the Trump Golden Dome missile defense system. We'll talk a little bit more about that tomorrow, but he announced $25 billion or $830 billion over the next 25 years, $25 billion over the next couple of years to be allocated to be building a missile defense system. I thought maybe it would have some implications on Palantir, Anduril, SpaceX. He didn't mention any of those companies. He did mention Raytheon, Lockheed, and L3Harris. So those were the three companies that were mentioned. They were up a little bit after hours. And that is something that, I thought some of the more modern defense companies would be a part of. Maybe they are, and he didn't announce them yet. But that is one piece of news that we had after hours. Last thing I want to end off with is a stat that I got yesterday. I didn't get to show it on the market close or the daily recap because I posted it before the stat came out. But retail investors yesterday bought the Moody's dip, if you want to count it a dip, in record numbers, surpassing April volumes. As per JP Morgan data, retail investors bought $4.1 billion of stocks within the first 3 hours of the market being open. Wild. 9:30 to 12:30. And the two biggest stocks were Palantir and Tesla. Tesla got $675 million of inflows. Palantir got $439 million of inflows. Pretty massive. Single stocks were $2.5 billion of the purchases, while ETFs comprised $1.5 billion of the purchases. So retail bought the dip. Retail's been buying the dip. I think it was a rebuke of Moody's, an argument that said, hey, we're not going to give up our stocks just because some credit agency said that credit ratings are bad for the United States. And it was a continuation of the buy the dip mentality, even if the dip was a very small dip, in the context of how retail is thinking about the overall equity markets and the buy and hold process for the long term. Today, we got some Bank of America research that is showing the opposite. Around 40% of institutional investors are now underweight U.S. equities, as per Bank of America research. Yesterday, again, JP Morgan said that investors bought $4.1 billion of inflows for retail stocks, or retail investors bought stocks worth $4.1 billion within 3 hours. Now, Bank of America is saying 40% of institutions are actually underweight U.S. equities, which is the lowest allocation since May of 2023. And May of 2023 is really when Nvidia started getting its momentum as well. So you have institutions that are still underweight equities. Retail's obviously overweight equities. They bought $4 billion worth of equities in 3 hours yesterday on like minuscule 1%, 2% dip. And I think the following is going to happen. Either retail is buying into a rally that has no real legs to stand on, and I would love to know everyone's comments in the chat, kind of or in your thoughts in the comments in terms of how you think this is going to play out. Either retail is buying a rally that doesn't have momentum and there's no legs for it to stand on, and people are going to be holding the bag, including myself, or the toots are going to chase, and they're going to chase aggressively. And if 40% of institutions, so the majority of institutions are equal weight or overweight equities, but 40% of them is, again, the lowest allocation since May of 2023. If they're going to have to be chasing the S&P 500 as it makes new all-time highs, if they're going to have to be chasing Nvidia and Palantir and Robinhood and Rocket Lab and all these amazing companies, I mean, dude, we are talking about trade deals that are going to be announced. We're talking about inflation that's coming down. We're talking about potential rate cuts that are on the horizon. We're talking about earnings growth that in Q1 was phenomenal. Hopefully that continues in Q2. And then we're talking about an AI tech revolution that is simply increasing the margin efficiency across stocks across the entire world, companies across the entire world, which we're seeing in the EPS data in terms of how they're beating on earnings per share. If all of those things are working in tandem and the institutions realize they can't be underweight equities, this game is going to get really fun because they're going to chase, and they're going to chase at very high levels. Smart money doesn't end up being that smart. By the way, if smart money was that smart, they would be beating the S&P 500 every year. Most of them don't. They just don't. Statistically, they don't. B, they wouldn't have sold the April lows because obviously they missed a 25% rally in the NASDAQ, where we went from, the lows down 25%. Trump's the worst thing in the world, 150% tariffs. And then boom, we're kind of right back to where we were. That was a amazing rally to be able to participate in, amazing dip to be able to buy. The hedge funds and the money managers missed it. So the question is, are they going to miss the next leg up, or is retail going to be left holding the bag? I think one of them is going to be right. You guys know my position. I think there's a lot of things, and I just named a bunch of them off the top of my head, that are pointing to a sign of a bullish market. Doesn't mean we have to go to S&P 7,000, but it also means we don't have to go back to 4,800 on the S&P 500. And as a result of that, I just think there's a lot more momentum for long-term investors, for people that are able to buy the dip, for people that are able to allocate into equities. Are there some stocks that are expensive and aggressive with the multiples? 100,000%. But I also think in the long term, based on all the catalysts I mentioned, being long is probably better than being net short or being on the sidelines. And we're going to see. We are really going to find out over the coming months if institutions decide to chase this rally and essentially join the party, maybe leave gold, leave money market funds, and start to participate with retail. All right, that's it for me. Thank you everybody for listening and watching. Long stream today on the market close. Appreciated everyone who was there for the full 6.5 hours. It was a fun stream, big day, got to cover a lot of stuff, and we will be back as normal on the market open, and we'll keep going from there. Thank you, everybody. See you guys on the next one.